You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. We're back in the studio this week with Chase, as always, and very happy to be joined by Ben Workman. Ben Workman is the founder of Numeris X. He's a key figure within the MSTR True North community. He's one of the most trusted analysts covering the MicroStrategy, now known as strategy, trade, and Bitcoin equities more broadly, which might just be the most exciting story ever in corporate finance, if you ask us. So really excited to dig into it with you.
Thank you, guys. Really appreciate you having me on. And I totally agree. It has been the most interesting area, and it's certainly given me plenty to talk about. So it's been fun.
Yeah, maybe that's actually a quick place to start is, were you speaking out publicly about Bitcoin or anything related to Bitcoin before MicroStrategy? Because my take on it is that maybe it wasn't until your research into MicroStrategy that you felt there was a need to kind of be more outspoken.
Yeah, so it kind of depends. On the internet, no. In my personal life, obnoxiously so. Yeah, I was definitely the person in my friend group and in my family group that was always harping on Bitcoin. I was lucky enough that I found it quite early for the first time. You know, everyone screws it up once, and I screwed it up in 2013. So, you know, I'm in that cohort where I thought I was a brilliant trader, and you buy a Bitcoin for $270 or whatever it was back in November. And then you sell it when it pumps, and you think you're a genius, and it goes into a bear market. You still think you're a genius. And then you spend a little bit more time digging into it, and you realize exactly what it was that you gave up. And then you totally shift your mindset, and you want to do nothing but accumulate more of it. So it takes a little while. I think everyone has to go down that journey. You got to get wrecked by all the altcoins once or twice before you figure out that that's just a casino. And then you just focus in on the one asset that you can truly articulate the value proposition for. And it makes your investing life a lot easier. But publicly, really not. During COVID, I kind of went into a dark hole in my basement for a while, started doing a lot of software development work, building trading tools, building basically algorithmic trading for digital assets. And then MicroStrategy really emerged. And early on, I hadn't really put a whole lot of thought into what they were doing. I just noticed that this was really the first corporation that wasn't aligned to the Bitcoin industry at all, so it's not a miner, that came out and started acquiring Bitcoin. And that piqued my interest enough to invest in it, because I was just telling myself, I'll invest in anything that's investing in Bitcoin at this point, right? I just want the asset to succeed. So if MicroStrategy at the time was buying Bitcoin, then I was going to support them by buying the equity. That was really as deep as my thesis was early on. And then over time, as it evolved, it changed a little bit. And I come from a commercial banking background originally. So I watched a few of the steps that they made, particularly when they were taking out secured debt, that really bothered me actually early on and made me a little hesitant about the trade, because I was a commercial credit analyst during the global financial crisis. And so I saw the impact that volatility in markets can have on what used to be really good businesses. And MicroStrategy wasn't a growing business, but it was a pretty strong business from a cash flowing perspective. It was just becoming a zombie because the growth prospects had died because they're competing against giants like Microsoft and some of the others. So when they went the secured debt route through the banks, it made me really nervous, because I knew all the terms and conditions that could trigger a liquidation on them that they couldn't even necessarily control, particularly given the volatility that Bitcoin just has as an asset. And banks hadn't matured enough to really understand that. So you knew that they would have kind of a hair trigger to shut that one down if they got the chance. So it made me nervous, but then I saw them evolve the strategy that they had and start moving more into the convertible debt market. And that's non-recourse debt that made me much more comfortable. And after a while, I was kind of wondering if anyone else was even paying attention to this, because I was talking to people in my personal life. My dad's a financial advisor, so I was talking to him about it, and nobody had any idea what they were doing. So I fired up an X account, and that was about a little over a year ago, maybe. Kind of the beginning of 2024 was really the first time that I ever started talking on X. And I was just trying to find people that were focused on the same thing I was. And that was how I got connected to a lot of the True North guys. So Jeff and Ryan originally, and I ended up doing a podcast with them. And that was the first public appearance I'd ever made. And it kind of spiraled from there because all of a sudden a lot of people got interested, right? Performance breeds interest for sure. And that was 100% true with strategy. And people were just captivated by the story. And I was too. And so you want to follow all the iterations of it. And it transformed a lot of things because eventually it became a part of my business. So most of what I do now is consulting for companies that are wanting to implement a strategy like this. And they want someone to come in and help think through their individual situation, look at the strengths of their business, and come up with a good strategy that they can implement successfully over a long duration of time. And so it completely changed what I was doing for a living. I'd left the consulting world and the traditional corporate world back in 2021, I believe, and kind of ventured out on my own. And this kind of brought me back in. And so now you're back in these corporations, hearing the conversations they're having, talking to the bankers, hearing really the stance shift from Wall Street about what this is, because they've realized what partners these companies can be to them. And just being able to see that interest level evolve, both from the retail side and from the corporate side, has just been a really cool seat to be in over the past 12 months. So it's been a lot of fun, and it's been a ever-evolving journey.
Yeah, and we're doing something pretty similar here at Acropolis, kind of serving as an outsourced Bitcoin Treasury team. So yeah, we're seeing a lot of the same things you're seeing, I'm sure. But for this first line of questioning, I kind of have like a three-part question, but we'll take it piece by piece because there's kind of a point that I want to uncover at the end of this. So let's start here. If MicroStrategy's capital raises grow faster than Bitcoin's price, which has been the case so far, then theoretically, would you agree that the number of Bitcoin that they can buy each year should actually be growing in Bitcoin terms, right?
Yep.
Okay, so I guess first part of this question then, do you expect the size of their capital raises to continue to outpace Bitcoin's price?
In the near term, I would say yes. Right now, I think that the markets have really opened up to what they're bringing because they're bringing unique products that haven't really been seen before. And I think that that's generating a lot of interest from the capital markets that opens up these deep pools of capital. And we're really watching the foundation of that being built right in front of us right now. You know, people are very confused when they start doing all the different offerings, mostly because it's a new thing to learn. But the convertible bonds, you saw them come out there, and then they were the #1 convertible bond issuer. Now you've seen them venture over into preferred. Strike was one of the best performing preferred stock offerings ever. Now you're seeing them come out with Strife, a different type that's targeting a different type of investor, right? Strike is really focusing on total return investors, so people that do want some of that equity upside to it, whereas Strife is really focused on the true yield investors, the long duration, very steady type of investors, some of your pensions and those types of things. So they're opening up all these new pools of capital. And while they're doing that, I think that the rate of change in the amount of capital that they can raise is going to continue to increase. And they've got such a head start that they're the only one really doing it at scale, where if you want to be an investor with a company, you want the one that's wildly over collateralized on all those obligations and that strategy today. So for right now, I absolutely say yes. I think that they're going to continue to be able to increase that probably for several years still. What the future looks like is going to be largely dependent on how many other companies enter this space and what type of market share they're able to capture. But when you're talking about the fixed income market in a $300 trillion market, it leaves a lot of room for growth. Mm-hmm. And if all of these different products that they're bringing to the market continue to grow and perform in the way their past ones have, I don't see the investor appetite drying up for that anytime soon.
Right. And theoretically, though, as long as there's a premium on the share price to current Bitcoin holdings, they are going to be able to continue raising capital faster than Bitcoin's price, right?
Yeah. Yeah, and the premium really applies largely though to the common equity. Right. That's where people look at that premium arbitrage, and they've started to shift away from that. And you start to hear them talk more about using that as a balancing tool for the leverage ratio.
Right.
And so until they're in trouble of getting out of their leverage ratio range, so if Bitcoin has a serious pullback, I think that they're looking for ways to alleviate that part of the equation. And now they can focus on some of these other fixed income offerings where you don't put the same type of pressure onto the common equity anymore.
Right. And so one of the things that attracted me to MicroStrategy first was that, yes, it's levered Bitcoin, but it's also Bitcoin at a smaller market cap. And so the idea is, of course, law of large numbers, and the bigger the market cap gets, the harder it is to 2x from there. And so my thoughts were basically, oh, okay, I can get Bitcoin, but at a smaller market cap, I should be able to get, higher multiples on this investment. But so if Bitcoin, the asset class, has law of large numbers, diminishing returns over time, and MicroStrategy is always this slightly smaller market cap that can, because of the premium, always raise capital that allows them to buy even more and more Bitcoin each year in Bitcoin terms, then I guess what is to stop MicroStrategy theoretically from buying all of the Bitcoin on a long enough time horizon?
Well, you got to have enough people that are going to give it up first, right? I mean, that's a big component to this. And it's interesting when you look at, even if you just zoom out a little bit, you look at the bigger trade, right? The Bitcoin trade against the US dollar. So you look at something like the US dollar, where if you're the Fed and you're trying to really focus on price controls, right? You're trying to keep prices down on things. Something has to give in the equation. Typically, that's going to be the supply, right? The supply is what's going to have to give if you want to keep the number on the price lower. If you want to take the opposite side of that trade, you need to find something that has the exact opposite dynamics. So in Bitcoin, there's one or two things that can give. It's either the price or the supply. Well, the supply is not going to give. Ultimately, the price is what's going to give. So yes, if you look at that law of large numbers on increasing their capital raises and increasing Bitcoin, I would view that as probably, putting a time frame on it's a little tough. I'm going to say for 5 years, they've got a full advantage in that aspect where they're going to be able to keep doing that. And it gives strategy the ability to outperform, potentially in Bitcoin terms. There is a diminishing yield return long term, right? I mean, that's just the math overall. So right now, the main focus for them is on Bitcoin yield. And if you look at the math behind Bitcoin yield, it does become exponentially more expensive to keep incrementing that over time, right? That's just math. So investors are starting to focus on that because they achieve scale so quickly. You don't have that same problem for a lot of these much smaller companies because they've not achieved the same scale yet where you run into that problem. But I don't actually view it as a problem long term because I think people get stuck in looking at one strategy and assuming that's the strategy in perpetuity. And I don't look at it the same way. I look at every company that I've ever dealt with that's building a roadmap is basically putting themselves on a continuous path of transformation. At least the good companies are. And that means that you're evolving, and each step in that evolution is building onto the next thing. So I actually, in my theory, I don't view what MicroStrategy is doing today as the biggest win that we're going to see for strategy. I think this is the building blocks of what's going to be the biggest win for strategy long term. And people are focusing on where Bitcoin is today, both in terms of its adoption and in terms of the products that are offered around Bitcoin and the way that Bitcoin's ingrained in the financial system today. And I think they're vastly overlooking the speed at which that's evolving. And if you look at the integrations coming with the banks now being able to custody Bitcoin, you've now got the US government out here talking about wanting to hold Bitcoin. That's opening the doors for people to view this not as a speculative bet anymore. And when I say that, I'm talking about entrepreneurs that want to build good products. This is now becoming a very safe asset to integrate into your product offerings. And so if I look out, I said 5 years is kind of what I look at right now. That's really kind of as far as I'm willing to look on the Bitcoin front at the moment because I'm looking at how fast it's changing, and it's almost hard to comprehend the speed that adoption is happening. And then I look at the next 5 years. And so I view right now the companies that are smart are using these treasury strategies to capitalize themselves for the future. I view it as the active pursuit of capital. And not everybody's going to have MicroStrategy's approach to this, right? They're going to look at ways for how can they utilize that Bitcoin later. I have no doubt that that's going to come over the next 10 years, which is why I don't concern myself with that conversation today. A lot of people do. And they say, well, they can't do anything with it. And I'm going, well, they could do stuff with it. They're just not right now. And there's a lot of people spending a lot of time building products and ingraining it into industries that are really appealing to that type of scale of capital. So, you guys have probably seen a lot of the stuff that Jeff Walton does, and he focuses on a very specific part of the insurance market that is absolutely ripe for an asset like Bitcoin to start being ingrained in some of those products. And so when you dig into what that means, it means that a lot of these traditional industries are going to be looking for this type of capital to bring in to their business. And that doesn't necessarily need to be through Bitcoin directly. That's what a lot of people miss. There's a big distinction in what strategy does between holding Bitcoin and having a corporate balance sheet. People don't really understand that distinction all that well. They think, well, all they have is Bitcoin. Well, to a lot of players, that doesn't matter. What they have is they have an incredibly strong corporate balance sheet. And having a corporate balance sheet lets you bring different products to different pools of capital. And that's the power that they have. So if you're an insurance company, you can come in and you can buy the corporate bonds, but you can't go buy the Bitcoin itself. So they've got themselves in a unique place with the scale that they have. So all that to say that I view this as a phased evolution of a business. I think they're completely reinventing themselves. And I think a lot of these other Bitcoin treasury companies are starting to have that focus as well. It's not just about Bitcoin yield in perpetuity forever. It's about competitive advantage in your industry and becoming the best capitalized business in your industry that allows you to innovate at a pace that other people aren't going to be able to. It builds the ultimate in optionality into whatever your business is. That's what I view the long-term game being. So while I'm always very bullish on strategy, that should be no mistake. And, it's a big part of my portfolio and I love to trade it because it's become this very unique trading instrument out there. It's the most fun thing you can do. Up, down, sideways, doesn't matter. It's always interesting. They're also putting themselves in a position to reinvent themselves as a business. And to be honest, I think that's actually where the biggest win out of all of this is ultimately going to come from. It's going to shock the market when they finally do it.
Yeah, that's kind of the white swan, right? Like it's
Yes.
predictable that they're going to have that optionality in the future. We just don't know to what ends they're going to use it for.
It's going to be when everyone doubts them the most. Right?
Mm-hmm.
That's usually how these things happen, is as soon as people are throwing in the towel, they're over it, one trick pony, something happens and it reignites the market again and people go, oh my gosh. And then you look and you go, it was so obvious, right? I should have seen this coming. I think you're going to have a lot of stories like that they're going to catch people off guard.
Very well said. I'll say something that I've said several times on this podcast and on external podcasts, in that the biggest risk to MicroStrategy, now strategy, I'm going to get better at that. It's almost like Twitter and X. I'm just now getting used to that. But
I tell people I need several years before I'm going to work it out of my vocabulary. They're MicroStrategy to me. I'll come around eventually, but it's going to be tough.
It's almost like a signal, actually. If you say MicroStrategy, it's like, yeah, I've been in the trade long enough, So
That's right.
it's
That's
almost,
how we'll be able to differentiate. Yeah.
Exactly. It's a badge of honor.
I guess that makes us OGs. But to continue with the question, essentially the biggest risk in my eyes is the custody piece of it. So how do you weigh the risk of catastrophic loss if their custody was ever compromised? Because I think it's something that just isn't talked about nearly enough.
Yeah, custody is always an interesting piece. And there's a lot of people that are upset by MicroStrategy not having the same level of transparency that some of these other companies have around exactly where the Bitcoin is, right? There's a lot of conspiracy theories that are out there about them not having the Bitcoin and all that stuff. But the reality is, as a public company, they've got some unique situations as a fiduciary in terms of how they need to manage the Bitcoin today. So it's no surprise to me that they didn't go down the path immediately of, trying to self-custody the Bitcoin and go through all that yet. I think that them going to some of these institutions at the scale that they're operating at, which is important, right? This isn't a company that owns 100 Bitcoin. This is a company that owns almost 500,000 Bitcoin. So there's a diversification of risk that a company like MicroStrategy has to take for their shareholders, right? Because they're responsible to their shareholders. And early on, I don't think there were enough offerings for custody for a customer like MicroStrategy. The space has really been evolving, and you've seen a lot of it happening out of the Bitcoin community now, where a lot of these companies are starting to work on that multi-institutional custody or multi-signature custody that's becoming much easier and frictionless for customers. And I think that's amazing. And that's probably going to onboard the next tranche of Bitcoin Treasury companies. MicroStrategy is at such a scale that I think that right now they would view it as they almost have to be in these mega institutions, right? A Fidelity signals to the market at their scale right now stability, right? People trust that name at the moment. And I think that's really, really important when you're buying Bitcoin at the scale that they are, that the market wants to see you partnering with a trusted company that's been around for a long time, even if they're not necessarily the pioneers in Bitcoin, right? We all know that that's not the case. And there's a lot of companies that are coming out right now that have what I think is probably at least a matching offer, if not a very superior offer, to some of these legacy financial institutions because they were built natively around Bitcoin. So I look at the next wave of companies and I say those companies are going to really be focusing on the different types of custodians that they can use. And when you get into these small and medium-sized businesses, I think that they're going to want more of a personal touch than what you're going to be able to get out of a Fidelity or a Coinbase Prime, right? I think that they're going to want those companies that they know that they can call, that can handhold them through the process. I think that's a very important part of that adoption curve, because early on as Bitcoiners, I don't think we necessarily made it easy for this type of adoption, right? We focused more on the cypherpunk type of marketing versus trying to meet the buyers where they're at. And that's changing now, because now all these products are getting that more frictionless user experience where you can get yourself into a self-custody type arrangement or a multi-sig arrangement with another institution or a multi-institutional custody arrangement. Those offerings are now coming out, so people can actually start building along their journey with those ingrained into their plan. And I think that's a huge evolution in this market. It's not just that you have to go rely on a Coinbase Prime to custody for you or a Fidelity or one of these mega institutions. You're now going to be able to find the right fit, right? The companies that offer the right fit for where your business is at. And that transformation, I think, is going to be very big for the onboarding of the people that are going down this journey next.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. Again, extremely well said. These are the types of conversations that we have every day, and it's the reason why we use OnRamp's multi-institution custody as the exclusive custodian for with every company that we work with, because I mean, just echoing everything you said, it's the most important aspect of your Bitcoin strategy is how are you actually holding the Bitcoin? Because if you lose the Bitcoin, it doesn't matter how many Nakamotos you have, or it has no regard. So I think that poses a hypothetical, and knock on wood, not wishing for this to happen whatsoever. But let's say they did lose the Bitcoin. How would we even know? Because they've promised to never sell the Bitcoin. They don't do proof of reserves. So couldn't the business just keep moving forward without any of us really knowing and seeing the same benefit to the network overall?
Not necessarily, no, because in that situation, we're talking fraud, right? That's
Right.
part of the issue. So if they were to lose the Bitcoin and then they don't report that out to the market, now you're in a fraud situation. So I don't think that that's necessarily going to happen. Now, obviously, it would be devastating, right? You don't lose 500,000 Bitcoin and move on with your business, business as usual without a lot of issue there. So that would be a catastrophic failure from a strategy perspective, which is why risk management and putting in the right frameworks around risk management and risk mitigation is a massive part of corporate governance for these types of companies. And I actually think it's the first step they have to take. You can't just, as a company, just dive into buying Bitcoin. You shouldn't, at least. You should really build out the framework. There's always the rush to market by a lot of companies. There's the excitement, and you just want to buy. But if you haven't defined how you're going to manage all the risks along the way, including custody risks, right? You might be splitting it up amongst several different companies in order to spread that risk. You might be bringing on insurance products to cover some of the Bitcoin in case there is a loss. I mean, there's a lot of things you have to think of before you even get to the market and start buying Bitcoin. And I think it's really important for them to take that step to make sure that before they embark on this journey, they have a comprehensive plan, one, for every different market condition that they might run into, and two, for how they're going to manage all this on the back end, right? How do you really ensure that you have a really robust custody solution for all your Bitcoin that can bring confidence both to your stakeholders if you're a private company, to your public shareholders if you're a public company, building that out, defining it, and letting everyone know how you're going to execute on this to make sure you're mitigating any of those major catastrophic losses is really phase one of this journey. And it's one that I push on pretty hard because people try to fast forward a lot because there's excitement and they just want to get to market. And you have to slow down and really think through the impact of this on your business because you're deploying serious capital into this type of a strategy. And it can't just be focused on the buying activity. That's just one point in time activity. It's all the management layer on the back end, all the governance that comes along with implementing this type of a strategy and making sure you have that laid out so that it's almost automatic. People know how to execute. They know how you're delegating all those risks. You're bringing in the right types of solutions to make sure that behind the scenes, everything is secure and safe and auditable for you. I mean, those are very important pieces of the puzzle before you ever get to the market to buy Bitcoin.
Yeah, so turning gears a little bit here, when we reached out to you to get you onto the pod, STRF didn't even exist yet. So, we were thinking, okay, we'll have him on to talk about this new product offering, STRK. But now we really are going to have to dive into the difference between this preferred stock offering of STRK and the new fixed income offering of STRF, so STRK and STRF. So the way I, take as much time as you need, because obviously there's a lot to suss out here, but how are these two vehicles different from the investor's perspective? And then how are they different from MSTR's perspective when it comes to their, accretive dilution strategy?
So it's been really interesting watching them build into this market for a while now. And STRK, I think when that came out, anytime you put the word perpetual on anything, it blows people's mind, right? And we saw that exactly happen with STRK. And really the main difference between the two is going to be the convertibility feature of STRK. And that brings in a different type of investor than a true fixed income product does. So STRK is going to bring in people that look for total return, right? And total return is yield plus capital appreciation. So that's a different type of buyer than you have for STRF, which we got to acknowledge is a great name for a product. I mean, it's very good. Perpetual STRF, it's great. But that brings in those true yield-focused investors that want long-term stability. They don't want it to be sensitive to the common stock equity. So the people that are buying STRK really do want that floor protection, right? You're higher in the capital stack. So in the event of a bankruptcy, you're higher up the stack than all the common stockholders. So in that stack, it goes convertible bonds are the first ones in preference. Then it's STRF, STRF is the next layer. STRK is behind that, and then it's the common stock, right? So the risk is in the common stock ultimately. And then these preferreds, they've got some protections there. So these really appeal to institutions. One, if you're on strike, you want some of the upside potential of Bitcoin through the common stock, but you also want a yield generating asset, right? So they're looking for that blend. You've got downside protection. You've got a return you can count on with that 8% dividend. It's $8 a share because, the yield can float, but it's $8 a share annually. So that gives them some potential for outsized return versus a standard fixed income product that is only offering a yield. There's no convertibility feature on STRF. So that is really what segments those two products. But it goes to a different type of a buyer. Not all buyers are going to buy a fixed income product with a convertibility feature. Some of them can only buy products that just generate a stable yield that they can depend on. And so STRF is going to be very interesting to see what the offering ends up at, because I think with STRK, people were a little surprised initially, because I think the first messaging was that they were looking at $2 billion worth of that preferred offering, and then they downsized it to 250 and ended up at 584, right? So that caught the market off guard. This one, they're starting at a pretty standard 500 million. And seeing how that is purchased by the customers, because they are making it a more institutional type of an offering, although retail can still participate through Fidelity in the IPO, but you have to have certain limitations on your account and certain amount of capital in the accounts to be able to participate. But they're really focusing on those institutional buyers, those pension buyers, whereas the convertible one is going to bring in a lot more of like the hedge fund crowd. So they're targeting different types of buyers and different pools of capital. I think that for people that have been focusing on the massive offerings, they're overlooking these a little bit because they want MicroStrategy. And we've been conditioned to see MicroStrategy come to the market now with billion-dollar plus offerings, right? $3 billion convertible offerings.
And oversubscribed every time.
Oversubscribed, yep, all of that. And so that's what the market became accustomed to seeing. With these, they're kind of setting them up, right? This is just getting them established because these are much more difficult to get to market with because they're not just private offerings. All the convertible bonds are private placements. So they're going out finding buyers, but you don't have to go through the whole listing process like you have to with these. So on these, you're seeing them establish these two products. And then instead of continually having to do new offerings, you get what you saw with STRK, where they open up an ATM that they can actually issue the equity for these new offerings through an ATM vehicle. And so they can do that whenever the market conditions are right for it. But what it does is it shifts all of that inorganic selling pressure off of the common stock and into the preferreds. And it's a unique vehicle because you can essentially think of it as a self-correcting vehicle, right? So if they go and they use the ATM on STRK and it pushes down the price of STRK because you've got more selling pressure in the market, the yield goes up. And as the yield goes up, you attract more buyers, right? And the market's going to always revert that back to fair value. So it's different than using an ATM on a common stock because it has that feature, right? That dividend is really a huge benefit to these preferred offerings for them. So they can alleviate all that pressure on the common stock, and that common stock is what drives that extra return on the STRK offering, right? Because it's got that convertible option, so it has that call option type feature. But then you've got the really stable offering in STRF. And that's one, anytime you can get a 10% fixed dividend, that's a huge return for a lot of people. I mean, I've told people before that when they put out STRK, it essentially became the cash account of my brokerages. If I'm settled out of any type of trade, it's just going to sit in STRK. Maybe it'll sit in STRF. I don't know yet. I've got to think about that now. But it became this new type of offering that I have a way to deploy as a retail investor, right? I'm not going to sit in a 0% cash account in a brokerage anymore if I can sit in something that's quite stable and get 8 or 10%. So it has a unique value proposition out there in the market that's going to keep the demand high for it. Now, the question always becomes, well, now they're building these liabilities that they have to pay, right? And that's a worthwhile conversation because that's real. You know, the business historically, and I take 2024, with a little bit of a grain of salt just because there was a lot of restructuring in the organization. So you had a lot of one-time costs within MicroStrategy as they were right-sizing the workforce, which is a really big effort. They were doing all the rebranding. There was a lot of one-times in 2024. But if you look back to the year before that, they've traditionally had $60 to $70 million of free cash flow. So you're benchmarking that against what they have to pay out on these perpetual preferred offerings. And people are going to initially look at that and think, well, right now they can float what they've got out there, right? STRK doesn't have a huge liability with it at the moment. Now they add STRF, that's going to be $50 million on its own. So now you're probably over your organic cash flow. How do you pay that? And the answer that is inconvenient, but it's the reality is if they need extra, either it's going to come from another capital raise or the ATM through the common stock. But that's much smaller. So right now, for scale, for what they owe, including STRF, we'll see what that ultimately ends up being at, but I think 10% is probably a pretty good pricing. When you look at that liability and you think about ATM usage, what we saw from ATM usage in Q4 was massive. With this, we're essentially talking about them turning on the ATM for 5 minutes, maybe, to fund these liabilities right now. This is the most liquid stock that's out there. And so while it's a good metric to look at, the equity has really become the product for strategy. And that leverage ratio keeps them overly volatile relative to Bitcoin, which makes it a massive trading advantage. It's a super liquid stock because it moves and investors can generate returns. So while we're out digging into all the details right now and looking at every component of the strategy, most investors are not doing that, right? How many stocks do you own where you've gone down to the level that you've probably gone on with strategy, right? What you're looking at is which stock is moving, right? You've got a lot of momentum investors, you've got a lot of volatility investors, and that keeps demand over there. So using the ATM at a much smaller scale is still going to be massively accretive. And when you look at the Bitcoin yield that's generated out of there, the math equation you're really doing is you're looking at that initial yield that they generate, which is far more accretive than even the convertible bonds we've seen, 0%, 55% premium, I think was the highest one that they got. So when you look at the yield from that, and then you realize that the perpetual preferred is significantly higher than that, what you're really doing is you're looking at that balance between what point in time will they have issued more equity through the common stock to fund the dividend payments out of these new offerings versus where that initial yield started, that break-even point on what they could have achieved through a convertible bond or any of the other offerings. That's what people are going to start focusing on now. And that's going to be a function of how the common stock performs, obviously, because if the share price is significantly higher, it's going to take far fewer shares for them to fund those liabilities. So that pushes that break-even point, 50, 60, 70 years out sometimes, depending on how you're modeling it. And sometimes it's perpetuity. There's never a cross. So it's a very interesting breakdown that they've created because they've created a product for every market condition. If market conditions are terrible for the common stock and Bitcoin's in the tank, you're not going to get the same economics on a convertible bond if the volatility crushes or on using the ATM on the common stock as you're going to get on a 10% fixed income product. You've always got that pool of capital available to you. Same thing with STRK, far less sensitive to the pricing in the markets. And that one's probably actually going to respond a lot more to changes in US interest rates, right? People forget that connection where that yield becomes more valuable depending on what rates are doing in the US. So there's a lot more dynamics to watch now when you look at each of these products, but what they're doing is they're creating an ability to operate no matter what the conditions are. And I think that's an immensely powerful setup that they have now.
So I think you can count on one or maybe two hands the amount of entities, if you will, that own more than 100,000 Bitcoin. MicroStrategy's got 500,000. The United States reportedly has somewhere around 200,000. So a little bit of a topic change, but curious, what's your favorite budget neutral way for the US government to acquire more Bitcoin?
So I think that the easiest way, right, the frictionless way, is just rebalance the reserve assets that you have. I mean, what was hilarious when they put that out was everyone digging into the different types of reserves that the US has. And we have what was it, almost $3 billion in cheese reserves or something. Like, I mean,
Gotta have it.
There's some
Gotta
wild stuff out there. But if you look at even just the gold, right? If you've got an administration that truly believes in Bitcoin becoming digital capital here for the future, you would look at your analog reserves, right? Your gold reserves, and go, if we have $740 billion, I don't know if that's the exact number, don't quote me, but it's somewhere around there, $740 billion, would it not be worth it from a strategic perspective for the country to take $10 billion of that and convert it into digital gold, which they put out in their own press release? It was one of my favorite parts about the executive order was that you could go to the White House website and they were doing the education to the market about Bitcoin as digital gold. It was great. And people are underestimating what that says to every other country that's out there. I mean, it's one of the areas I've been harping on for quite a while now. When you look at assets and trying to determine what should be strategic to a nation, you really do have to look at how could all of the other nations utilize this in a way that's damaging to you. And they would look at it differently, right? They would look at it as, how do we use it in case the US gets grumpy with us, right? I mean, we saw that with Russia when they cut Russia off from the SWIFT network. That was a big wake-up call to most nations going, we're very sensitive in the global financial system because everything's flowing through the US dollar. And if you look at a country like Russia, what that woke up was, we have a real strategic need as a nation to own a sovereign asset, something that a country like the US can't shut us off from. And there's really only one with any scale that allows them to transact still, and that's Bitcoin. Bitcoin's a great tool for settling trade at a nation state level. It can handle the vast amounts of capital that need to move in those transactions. So if I'm the US, the way that I look at that is no asset has been a reserve forever. It's always changed. So if you are the reserve currency in the world today, you need to look at how confident are you that innovation is not going to create an off-ramp for all these other countries to separate themselves from the controls you have on them today. And I see Bitcoin as being that threat. And if that's a threat to the United States and to the dollar, your best way to neutralize that threat is to participate on a proportionate scale to your influence in the economic world today. So I would take a hard look at all my other reserves, particularly the gold reserves, and I would look at whether we should just be shifting those over and converting them into a digital type of reserve. And I think that's the easiest way that they're going to get this done in a short period of time. But I think that there's a ton of creative solutions that are coming out, and I'm very excited. I think they had 60 days to develop their strategy for doing this. So I'm going to be very curious what these guys are uncovering because, Lutnick's a guy that absolutely wants to be buying Bitcoin. He's personally invested in Bitcoin. And so I have zero doubts that they're going to find ways to make this happen. I think the US will be accumulating, and I think they'll be doing it this year.
Yeah, we're of the same opinion. So, Ben, for the sake of time, and you're pretty self-aware of this, I've heard you joke about it, but you're pretty well known for giving these long, thoughtful, long-winded answers, which obviously is needed when we're diving into these nuanced discussions on Bitcoin and MicroStrategy and securitized Bitcoin and Bitcoin equities, all this stuff. So for the sake of making sure that we can get to some of the questions that we wanted to make sure we got to with you, we actually created a speed round just for you. Call it like rapid fire, one answer kind of questions. So I hope you'll, bear with us here. So I'll go ahead and kick it off. And Mason, I think you're ready. We're going to kind of be switching off every couple questions here. So again, the point here is just kind of to move quickly. If when we get to the end of it, you want to shed light on any of these more particular, happy to spend the extra time. But here we go. Are you ready?
I'm ready.
All right. What's more bullish for MicroStrategy? Entering the S&P 500 or receiving a AAA credit rating from all the rating agencies?
S&P 500.
In the long term, who will have the lower borrowing rates? Spot Bitcoin holders who are posting it as collateral, or Bitcoin ETF holders who are posting their shares as collateral?
Spot Bitcoin holders.
True or false? The growth of Bitcoin hash rate from here is irrelevant because the protocol is already sufficiently secured.
Ooh. I'm going to say false.
What one person, if they became publicly bullish on Bitcoin, would have the largest impact on price?
Tim Cook.
True or false? Will MSTY be one of the best performing dividend ETFs over the next decade?
False.
Which S&P 500 company do you think might be the next to buy Bitcoin?
Meta.
Which state will be the first to get their strategic Bitcoin reserve fully passed?
Michigan.
Which country will be the next to establish a strategic Bitcoin reserve?
China.
Will Senator Lummis's Bitcoin Act, which wants to acquire 1 million Bitcoin, will that pass at some point during the current administration?
Yes.
How many Bitcoin will the U.S. hold, by your estimation, by the end of 2025? If they hold 200,000 now, if we're assuming that they have those 200,000.
$400,000.
End of year Bitcoin price.
$215,000.
End of year MicroStrategy price.
725.
Oh wow. Okay. That was it for the speed round, but I'm surprised only 725 on a over 200K Bitcoin. Maybe explain that a
You
bit.
didn't ask for the peak price. You asked where it would end at the end of the year. So.
Oh, okay. But
yeah.
okay, so if on December 31st though, what did you say, 230? What was the Bitcoin price there?
Yep, 225.
225. So on December 31st, if we're at 225, you see MicroStrategy in the 700 range?
If we end the year at 225, then it'll probably be higher than that. It would probably be in the, I would say in the mid 900s would probably be my guess. But I think that when I look at that, I still view it in traditional Bitcoin cycles. And what can happen a lot in the Bitcoin cycles is you get these massive blow-off tops at the end of a Q3, early Q4. And I like to allow for people to start panicking around that a little bit. So the end of the year, I could actually see as part of that period in time, because these cycles, particularly in the retail community, which is a significant part of MicroStrategy, they can become self-fulfilling because people believe so much. I personally believe in an extended cycle, just to be clear. I actually think it's going to keep going. I think that we aren't going to see a traditional top like we've seen before. We might see some small version of it. But from the retail community, a lot of people have been in this for so long, and it's just become so ingrained in the ethos around the 4-year cycles that I think you start to get a lot of preemptive selling that happens going into the end of the year by people anticipating a bear market turn. And I think that you'll see an outsized impact of that in equities, which is why my price that I target on this is actually lower than I think a lot of people would expect, is because those types of reversals, when you look at what people talk about with the multiple to net asset value, it becomes a sentiment indicator, essentially, if the market is the way that I look at it. So you see these expansion periods when everyone starts getting really, really bullish on Bitcoin, and then it contracts, and it can contract pretty fast when people start going risk off and they're not as confident about Bitcoin. And I can see that happening at the end of the year. Now, the US, if they are actively buying going into the end of the year, I think all bets are off. Then I think my 225 could be very low on Bitcoin. I think my MicroStrategy could be very low. So I like to leave a lot of room for that. I'd rather be disappointed to the upside than the downside. So I try to make sure any targets I'm ever going to have, I think are really achievable for both my personal investing and for anyone else who listens to me. I don't like to do the parabolic estimations because I think that there's a lot of people that can get lazy in their investing and try to just trade around that, which is not a good practice. The other one where I said Michigan, I don't actually think Michigan's going to be the first, but I was in Lansing, our state capital, talking to one of our state representatives yesterday about Michigan's Bitcoin bill. So I'm very bullish on what they're doing here, and I do think that they're going to get it passed, but they might not be first. But I like to cheer for the home team.
You know it's going to be Texas, right?
I know it's probably going to be Texas. Yes, I can't give you that win right out of the gate. I got to cheer for the home team.
Things happening in Wisconsin too. A lot of activity there, apparently.
And Arizona, right?
Yeah, in Arizona. So Ben, there were two there. I'm kind of glad we did the speed run because there were two that kind of surprised me as far as your responses. So maybe those will be the ones that are worth you humoring me and us sussing out a little bit more. So sure. When it comes to choosing, you chose the S&P 500 over AAA credit rating to MicroStrategy being more bullish. Obviously, the passive flow into MicroStrategy's common stock, if they enter the S&P 500, is in the billions of dollars. But these bond, tranches of capital, we're talking hundreds of trillions, and some of them can't actually participate until they see a AAA credit rating. So, don't you think that theoretically the passive income, or maybe it wouldn't be called passive on that side, but the flow of capital into MicroStrategy would be more significant with a AAA rating as opposed to S&P 500?
It's certainly possible. I think you're going to get a broad scale re-rating on Bitcoin equities at some point. I don't know that they have to make it into AAA for that to be really impactful, which is largely why I said no there. Okay. The S&P becomes perpetual inflows as they grow in scale. And keep in mind, that doesn't mean that the stock price has to go up, right? You're really looking at the market cap there.
Right.
So it becomes the self-fueling inflow of capital that gets rebalanced in constantly. And you've seen the impact from companies that have gotten into the S&P 500 and just how impactful that can be to the equity pricing. Now, AAA obviously lowers the cost of capital for them. No doubt about it. Be a massively bullish catalyst. And it would also fuel the S&P side of the house. So when I look at it and I go, what do I think is going to be best for them from an equity price appreciation? And I'm looking more short term is what I'm doing here. I look at the S&P being kind of the ultimate validator for MicroStrategy as an equity, which is why I think that one's probably the biggest bullish catalyst to that price. I think that the ratings are just going to come. People are going to understand how strong of an asset Bitcoin is going to be. And because of that, you're also going to have more equities that would diversify their holdings into Bitcoin. So now you'd have many more equities that are also going to have a strong credit rating. So it depends on where you're at in the cycle. If they're already at a mega scale and they're using different vehicles that don't require that credit rating, then that's not as impactful for that part of their business. If they're issuing via these ATMs and all that kind of stuff, that's not as impactful in that type of an arrangement. So for the moment, I look at the S&P 500 as being the biggest catalyst that they could get right now. I'm not necessarily in the camp that it happens right away. I think that there's going to be some active resistance against them getting into the S&P 500. So we'll see what happens there. The other one that I saw some reaction from you guys was on MSTY.
That's my next one. My thought is maybe you didn't want to, vouch for it because it, maybe you just weren't comfortable promoting it. But yeah, if you could explain.
Well, there's certainly some of that. MSTY, I think it's been a great product, but I think it gives people this sense of stability that it shouldn't necessarily yet, because I don't think a lot of people understand what that yield really is. People are looking at it right now and assuming that they're generating 100% returns from their covered call strategy, and that's not what's happening. More than half of that return is capital return. They're just giving the money back to investors. It's not actually coming from the returns that they're generating out of that product, which is great while things are going really, really well. But if you get a significant and sharp pullback, it can be a real problem because you can get that NAV erosion out of that product. So I always caution when people look at that product and they think that that's the yield that you're going to get forever. I don't necessarily know that that's the case. Obviously, if Bitcoin goes on a straight up and to the right trajectory, they can generate that for a very, very long time. But you gave a long time frame on that. Yeah,
Decade.
It makes me nervous on a long time frame like that for them to generate those types of returns. And that's what investors have become accustomed to. I know there's more products coming to the market that aren't going to have that same NAV erosion. So I view those as more pure products for a covered call strategy and generating actual yield where you're going to get to focus on what the true yield generation of the team is. I think that's very important. When you see kind of the blending of capital return and yield, it gets a little convoluted to me, and that makes me nervous. So I've been in Misty. I don't hold a lot of long-term positions in Misty. Usually I'll buy them after the stock has a major pullback, and then I'll look for some entries on that, but I don't hold it long-term. But I know a lot of people that have, and they've made a killing doing it. So, but you're right. It's not something that I'm going to endorse because it does have that nuance that I just think investors really need to educate themselves on. And they haven't needed to yet because there hasn't been an alternative product they could go to. But eventually there will be. And I think that type of competition is going to create a much more informed investor base. And then we'll see. Maybe they're still the best. Maybe they're not. But time's going to have to tell that story.
But with it being kind of this covered call strategy, and yes, it's not all the returns are coming from the selling of covered calls, but theoretically, isn't a bear market or a Bitcoin pullback going to increase the returns?
Sure, it could. It depends on what trades that they're in at the time. But it also, if you're trying to keep that same yield, you're returning more of the net asset value out to the shareholders to keep that yield in whatever that target range is. So you might be eroding some of that base where if those returns don't really pick up, because when you're doing covered calls, you've got kind of a defined return in that transaction, right? So, and obviously they're rebalancing constantly. So I'm way oversimplifying that because they're using a lot of, synthetic longs and spread. They're using all kinds of stuff. It's not just selling covered calls on things. So they're doing a lot of things. But that NAV erosion always makes me nervous because there's been prior funds where you don't think it's going to happen and then they've blown up because of it. So it just makes me nervous that I don't try to push people into those products unless they really understand how it's going to react in all the different market cycles. If you're returning NAV at a low, you're bleeding out the assets that are within that fund. And if it keeps going lower, you get into this really bad situation. So we'll see. I'm not actually bearish on it. I just think that people need to go in eyes wide open in terms of what it is they own and how they're getting those returns. That's the main point that I push on with those. I love covered calls. I do it all the time personally. It's great.
I know you just
need to know what you're in.
Yeah, most people aren't savvy enough to manage their own covered call strategy. So things like this start to become appealing to retail investors who know that a covered call strategy is kind of a good tool to have in the toolkit, but have no idea how to execute. Obviously we're not promoting MSTY either, just trying to learn more about that product from your eyes. So let's maybe end with this. If you're a Bitcoiner and a MicroStrategy bull, you understand the thesis for both, but you need some passive income because you want to make sure that you don't have to clip your Bitcoin at inopportune times. I'll throw out a couple strategies. You tell me if there's something that you like the best, or you might actually feel safe recommending for somebody who's done the homework on both. So obviously you can hold Bitcoin and just kind of clip a little bit as you go. That's not ideal. You could borrow against your Bitcoin, but right now we're seeing pretty high, interest rates and, not that many established lending partners. So you could get liquidity that way and then try to repay the principal repayment, but there's some risk there. You could hold STRK or STRF. What do you think is an appropriate passive income strategy when it comes to somebody who wants to be all in, fully exposed to Bitcoin and or MSTR?
Yeah, I think that right now the perpetual equity offerings are really good for the passive income side of things. If you're not going to go down the actively managing your own out of covered calls, because I do think that that's one of the most powerful tools that you have when you own significant MicroStrategy shares, because you can sell so deep out of the money, but because of the volatility that comes along with that equity, the premiums are still pretty good. So you can sell things that are 10 delta, right? That are way out there and still generate really good returns out of that. If you're going truly passive, right now, I think that like an STRK, because you can buy that at opportune times that generate you a higher yield than the implied 8% dividend yield that they say. So like right now, earlier today, it was down at 82, which is getting really close to being a 10% yield with the optionality. So you've still got the opportunity for capital appreciation. You're not fully giving that up, but you're generating a, call it a 9.5% yield. That's a really good passive opportunity. The lending, I think, is going to become massive, but the rates right now are a little prohibitive, right? You've seen a lot of rates in the 16, 14, somewhere in that range for a long time. But I think we're migrating to much more traditional lending arrangements around Bitcoin because financial institutions are finding out what good collateral Bitcoin makes. And I can tell you, having needed to go collect on collateral, I would have loved to have piles of Bitcoin that I could have collected on. But I think that's going to bring you much closer to like a traditional SOFR plus arrangement on borrowing instead of the high rates that we've seen. So I think that for people that have really been actively accumulating Bitcoin for a long time, that's going to be really powerful for accessing the capital when you need it, not necessarily in a passive income way, but you'll probably see people that are arbitraging and, you go borrow. If you can get a SOFR plus where you're effectively at a 7.25% rate, they might take that, go buy STRF with that proceeds, do the arbitrage of 7.25% to 10%. You'll probably see people doing that. People are very creative. That's what I've learned. So, but for me right now, the perpetual preferreds offer kind of the best opportunity that I see right now for the passive income side.
Okay, and sorry, Mason and Ben, one last one here, because you did just re-raise it here. Because another one from the speed round was, who's going to have the lower cost of capital, the lower borrowing rates? Spot ETF holders, somebody who, has IBIT, yes, I guess spot ETF is the right way to say that, or actual spot Bitcoin holders who are posting it as collateral. You said spot Bitcoin holders posting it as collateral. I wonder, though, if to some degree, somebody like BlackRock is going to, in some ways, subsidize those borrowing rates to make sure that the ETF becomes the more attractive collateral to borrow against in the Bitcoin space. But you said spot Bitcoin. So maybe you have a thesis there. I don't. I'm trying to develop my thesis there. But if there's anything you can share.
Yeah, I think that the spot Bitcoin becomes the most pristine collateral that you can have out there. So BlackRock right now, they're really just the holder of that capital for people, right? So really, if you're borrowing against that, you're probably borrowing against it through either your brokerage or some other financial institution. But Bitcoin has the direct asset that they've got claim to without even interacting with your brokerage. So when you can get into these arrangements where the banks have these multi-custody where they're one of the key holders and then someone else is so that they can collect on that collateral if they need to. And they have the ability to garner personal guarantees from people. You've got this real blend now of assets securing a loan that you have. To me, that makes it significantly de-risked from even something like holding an ETF. So I think if you were someone going out and looking to borrow either longer term capital or you wanted to keep a line of credit available for yourself at very low rates, I think that combination is what makes that cost of capital so low, right? Bitcoin is the foundation of that, but banks have some additional flexibility that they can have depending on how badly you want access to that collateral. You could sign up for just a straight asset-based lending arrangement where just the Bitcoin is the collateral. But if you want truly low rates, you can then combine that with levels of personal guarantees or whatever you want to do to lower that even further. So that's why I view it, coming from a traditional lending background, that I see that as being like the ultimate in getting cheap capital.
That makes a ton of sense. Yeah. So one less middleman and personal guarantee. That's, just to wrap things up here, but at Acropolis, we're obviously encouraging corporations to get comfortable holding spot Bitcoin because not only should they remove as much counterparty risk and take responsibility and learn about the asset class that is, the future of their corporate finance, but because of the borrowing rates that we believe that businesses who secure these big positions of permanent capital in the form of this digital scarce asset, the borrowing rates that they're going to have as an advantage in their industry in the future. But wow, Ben, thank you so much for letting us dive in and pick your brain the way we did. This was incredible. Mason, any last thoughts from you?
Yeah, I'm looking forward to, looking back on the receipts per se in January of 2026, looking at our price predictions. For the record, ours are really close. Mine is at 250K Bitcoin price at the end of the year. So last year, my price prediction was 121 and was just a hair under. So if we're just a hair under this time, then looks like you'll be the closer one.
And I might be the champion. I like that.
I guess I should say mine then too, just to make me equally accountable. So I'm 230 Bitcoin end of year and $1,000 MicroStrategy price.
Very nice.
I'll come in at 777 MicroStrategy price. I like numbers.
The repeating numbers. I like it.
Well, I think the title of this episode, Ben, is probably going to be MSTR Masterclass, because I believe that's what it was. So thank you very much for coming on the show and for all the insights. I want you to give the folks where to follow you and find your work. But before I do, I have to plug the show because I don't do it enough. There's way more people who listen to the show and watch the show than interact with our channels, follow and subscribe to the channels. So if you enjoyed this interview, you found it helpful, then please do that for us. But without further ado, Ben, where can they find you as well?
Yeah, I'm pretty easy to find. Most of the stuff that I put out is just going to be on X, and it's just at Ben Workman. I'm not hiding, so you can find me out there. And then usually every Wednesday, we do a live stream with the MSTR True North group where we talk about all the market developments around MicroStrategy. So that's where you can find me.
Awesome. Cheers, guys.
Thanks, Ben.
You bet.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.